Hey guys, this is Kronos, bringing you a video on Peercoin inflation. The Peercoin inflation rate is the rate at which the supply of Peercoins is expanding over time, and it's very interesting what affects the inflation rate. So I'm putting together this video just to show you a little bit about how that works and to solve one of the mysteries that had me confused in the Peercoin inflation rate. If you're not that interested in Peercoin, well, you probably don't want to watch the video because this is very Peercoin specific, but you'll probably learn a little bit more about Peercoin if you do watch. So let's get started. This website is purechain.net, as you can see here in my browser tab, and you can go here to check the Purecoin inflation rate at any time. The inflation rate right now is exactly 4%, but that's over the last 2016 blocks, so it changes pretty regularly, but it's sitting around 3, 4, 5% for the last month or two. It's been very consistent. So this is where you can check the inflation rate. This is 4% annualized, which means every year, on average, we're going to see another 4% growth in the supply of Purecoins. That is not very much growth. Compare that to Bitcoin, which is 10% right now. In 2016, it's going to cut down to about 5%, but that's still higher than Purecoin. In fact, this is rivaling a lot of fiat currencies in the world today. Well, a few of them, like maybe the Indian currency, but a lot of currencies right now actually are having very low inflation, but we don't know what's going to happen in the future. I expect we'll get a higher inflation rate in fiat currencies like the euro, the dollar, the yen, that kind of thing. I don't know exactly what's going to happen there, but let's look at Purecoin. There's a very interesting set of charts here on this website, inflation charts. So let's jump over there and we can see inflation data over time. So if you didn't know about this website, definitely check it out, purechain.net, where you can see inflation rates over time. Let's look at the 1-year graph, and you can see a very strange looking spike here that immediately drops off. And this is the point of the video. What is the cause of this spike? And this is September, October 2014. If we scroll back, we can see another similar one back in December of 2013. Now, those of you who know your Purecoin history know that these two spikes were caused by the price increase in Purecoin. This one was triggered by a craze surrounding the launch of new bits, which happened late September. And this one back here was the beginning of the end of 2013 bubble, when the Purecoin price went from like 50 cents all the way up to $8. So this is connected to the price, but why does the inflation rate go up and then immediately back down again? Well, it's connected to the proof of work reward. Let's also look at the proof of work difficulty chart. Now, you can't see it very much in this early bubble over here, but over on the right, take a look at this. Oh, you can't see it. I've got it chopped off. Let me see if I can scroll over there for you. Oh, this is terrible. You can't even see the one on the right. How do I make that visible? There we go. There's the two bubbles I was talking about. There's the one on the left and there's the one on the right. Okay, so the one on the right here that happened in September 2014 corresponds to an increase in the mining difficulty and then a drop off in difficulty as well. But the drop off isn't important. What's important here is the increase, actually. Let me narrow this down to just focus on the first spike. This is around the 2nd of December, and if you scroll up here, you can see this is surrounding this first spike here that happened around the 2nd of December. As the difficulty shot up from 10 million up to almost 30 million here, this is a very big increase in mining difficulty. That corresponds to this increase in inflation. And this is very counterintuitive. You would think, let's jump over to this later one because my point is a little bit clearer over here in September of 2014. You would think that as the difficulty goes up, inflation rate would go down. Here's why. Chart number 3, Purecoin proof of work block reward. This is the reward for mining Purecoins. And as the difficulty goes up, the reward goes down. This is built into the protocol. It's built in that says the higher the difficulty, which means more miners competing to mine Purecoins, the lower the reward goes. Now, blocks come out about every 10 minutes, which means lower reward every 10 minutes means lower inflation because lower reward, but that's not what we're seeing. So here's the reward going down, corresponding to the difficulty going up. This is the difficulty, and then when the difficulty drops off again, then the reward picks up again. So this is kind of an inverse graph here, reward going down and back up, and the difficulty going up and back down. Is that making sense? It's a little bit confusing, and I'm flashing all these charts in front of you, but hopefully it's making sense. So the question is, why does inflation go up if the reward is going down? Well, my first guess was that all these new miners were causing blocks to come out more quickly. And I actually assumed this for a couple weeks till I did some research, and I found out I was completely wrong. So let's draw what I thought was happening. Here are some Purecoin blocks. These blue blocks represent proof of stake blocks coming from stakeholders of Purecoin. These blocks do not produce that much of the inflation rate. It's at most 1% because stake is rewarded 1% annually. And then the red block represents proof of work. So a couple bunch more, 5, 6 proof of stake, and then 1 proof of work. Well, I thought these new miners are coming online, so we're seeing blocks come out really fast. Here I'm just kind of overlapping them to show that they're coming out more often than every 10 minutes. And then it's dropping off, and maybe they're spreading out and coming out less often than every 10 minutes, etc. So this is what I had in my mind. Blocks mining quicker, causing inflation to go up because more rewards. Well, I was completely wrong. I looked at the block timings, and it turned out to be close to 10 minutes either way. The new miners were coming online, but the difficulty was adjusting to keep up with that, so the blocks were still coming out every 10 minutes. So what was really going on? Well, this is the point of the video. What causes this bubble here? The answer is the ratio between proof of work blocks and proof of stake blocks. If there aren't very many miners, or if let's go back. If there's a consistent number of miners, then gradually you'll hit an equilibrium number between proof of work and proof of stake. And that equilibrium is about, I've seen 6 or 7, maybe 5, maybe 8 proof of stake blocks, which is these blue ones, minting just a little bit of Purecoins, for every proof of work. So yeah, over time, you're going to see 5, 6, maybe 7. And if things are very stable for a long time, you could see 8 or 9. And gradually, the proof of work becomes a little bit less common. But it can't go less than 1 every 10 or every 11. The protocol has a kind of an upper limit for that. This is really getting into the nitty-gritty of the code. Well, what happens when these miners jump on is there's a lot more competition to mine. So you see a lot more red blocks in here. And I'm going to put more red ones. And the red blocks, the proof of work blocks, are the ones that are creating so many Purecoins, because the reward here is 60 or 70 Purecoins per block. Whereas if you're minting, then that would be 1% of your minting. So you have to have like, what, 70 is 1% of 7,000? So that'd be 7,000 Purecoins minting after a year of sitting on average. So the mining is creating the majority of the blocks here. So what this means is miners get more blocks. You see more red here. And then, whoops, that's not a square. There we go. And then as the mining difficulty drops off, you see the opposite happen. You see a whole bunch of blue and then very few red. Does that make sense? More proof of work blocks causing a greater reward. But this actually means things go back to equilibrium, which is why the bubble goes down again. What you see, well, here's the difficulty returning back down. But if the difficulty doesn't return, let's go back to the bubble in 2013. So I'm scrolling back to December of 2013. You could see the inflation rate going from 8% up to 17% and back down to 8, 7, 6, something like that. It returns back to normal. But the difficulty does not return back. That's because the ratio of proof of work, while more miners are being added, more proof of work is kind of condensing into the blockchain, but then it recovers and expands back out. So you can imagine if more miners are joining, then it compresses more rewards. But then if there's a consistent number, which is, this is a higher number now, there's more miners, but they're not increasing, they're staying steady, well then it gradually expands out. Things catch up and hit more of an equilibrium, which is why the inflation rate goes back down. So it turns out this is only going up because it's only looking at a short-term horizon. It's looking at the last 2016 blocks, or about, that's like 3 days of blocks. So if you look at those last 3 days, you'll say, oh, it's inflating because of all these proof of work blocks. But if you take a longer term view, this bubble actually shrinks down to be completely flat if you look at a long-term view, because things return to equilibrium and there is not that high rate of inflation. Does that make sense? Maybe it doesn't make sense. If it does not make sense, you can ask questions in the comments of this video or head over to the forums, the Purecoin forums at purecointalk.org, where I'd be glad to help explain this because it's pretty complicated. But the takeaway from this is, even if you see inflation rates shoot up and down, that's not actually what's happening because it's a short-term view. In the long term, it's quite steady and it's sitting between 3 and 5% at this point. And it doesn't look like it's going to go back above 5% unless Peercoin becomes completely shot. Because miners are more efficient than they used to be, we're going to see inflation just trickle off lower and lower and lower, which means your Purecoin holdings are secure for the long run. I'm Kronos. Thanks for watching.